In recent weeks, Ethereum has become the center of an incredible flow of liquidity. Just a few weeks ago, ETH was testing the $3,300 level, and today it has surged past $4,200, once again capturing investors' attention. But this rise is not a development that concerns only Ethereum investors. History shows us that in such periods, the capital flowing into ETH soon begins to move toward other altcoins, especially those with strong fundamentals. That's why today I'm going to explain how this movement in Ethereum could create a domino effect for XRP. Right now, Wall Street funds, institutional investors, and large whales seem to have converged on one single point: Ethereum. The reason is not just the price increase, it's also the perception of regulatory compliance and safety for the US markets. So what happens after such an intense inflow? We know that liquidity never remains in one asset permanently. Capital always looks for new opportunities, especially when prices reach their peak. Let's go back in time. When ETH tested the $4,000 level in December, we saw significant activity in XRP in the following weeks. Now, a similar picture is forming again. That's why the next 30 days will be critical. When a large portion of ETH investors move toward profit-taking, massive amounts of capital will look for new destinations. And this is where XRP comes into play. Because the story of XRP is not just about its price chart. Court victories, potential ETF approvals, superiority in cross-border payments, and high transaction capacity, all of these have already caught investors' attention. Moreover, liquidity flows tend to accelerate with psychological effects. When a price movement begins in an asset, the number of investors multiplies with the wave of FOMO. Now I ask you, how quickly do you think Wall Street will start looking for the next big story after Ethereum? And how long will it take for that search to bring them to XRP? In a moment, I'll explain step by step how we can read the underlying mechanism of this capital flow through on-chain data and whale movements. Because those who detect this flow early will be the ones who can take positions before the wave arrives. The current rise in Ethereum is not solely due to the natural dynamics of the market. There are much more strategic moves involved. Behind Wall Street's interest in ETH lies not only the price increase, but also ETF expectations, staking income, and full compliance with US regulations. Ethereum is reinforcing its institutional-friendly image with great success. For example, in recent weeks, major investment firms have begun expanding their Ethereum staking services. This is not just about earning passive income. It also means increasing control power over the blockchain. As institutions hold larger shares in the network's validator nodes, their influence over the ecosystem also grows. So why is this important for XRP? Because after such capital accumulation, investors feel the need to diversify. When most of the liquidity is concentrated in ETH, they turn to other assets to reduce volatility risk and seize different opportunities. In this process, XRP naturally becomes a candidate with its technological superiority and usage in the global payment infrastructure. On-chain data also supports this theory. Over the past 6 months, when ETH's price has seen major increases, the number of active addresses in XRP wallets has risen by an average of 18%. This shows that investors tend to shift to XRP after movement in Ethereum. But the most interesting point is that this transition is usually fast. When Ethereum reaches a peak, the wave of profit-taking spreads to other altcoins within a few days. During this period, XRP's volatility rises, and trading volumes experience dramatic increases. A likely upcoming scenario is this. ETH makes a new short-term peak in the next few weeks. Then, large whales take profits, and this capital moves toward new opportunities. If, during this period, positive news comes about XRP's ETF approval process, two catalysts would operate simultaneously. Liquidity exiting Ethereum and a new wave of demand for XRP. There's one truth in the capital markets. Money always flows to where it sees the fastest and most profitable opportunity. Today, that direction may be Ethereum, but tomorrow we may see a very different picture. It's no coincidence that XRP is one of the strongest candidates to benefit from this capital flow in the coming period. There are 3 main reasons for this. First, its technological infrastructure and transaction speed are much higher compared to Ethereum. Second, its transaction costs are extremely low. Third, it already has real-world usage in the global financial system, something many altcoins have yet to achieve. Investor psychology plays a decisive role here. Price movements usually occur in two waves. The first wave comes from investors who take early positions. The second wave is triggered by news in the media and the FOMO effect on social media. If the liquidity wave leaving ETH flows into XRP, this second wave could be much stronger. The closest example to this was in the 2017 Bitcoin bull run. After Bitcoin peaked, capital flowed into Ethereum and then into other altcoins, causing striking price increases in a short time. Today, the possibility of the same mechanism repeating is on the table. Now think about it. Within the next 30 days, Ethereum peaks, followed by an XRP ETF approval, and large whales enter this market. This would create a breaking point not only on the price chart, but also in market psychology. And such moments often mark the beginning of an irreversible upward trend. That's why the most important thing in this process is to catch market signals early and predict the direction of capital flow accurately. Ethereum may be at the center of the stage right now, but those who can already foresee which player will take the spotlight when the stage changes will win. If you found this analysis helpful, don't forget to like the video and subscribe to the channel. In the next video, I'll take a detailed look at how the potential liquidity shift to XRP can be read in on-chain data and which indicators give early signals.